Welcome to Banking 101. If you have not taken the pretest, pause this video and do so now. Once you've started earning money, you have to figure out the best way to spend it. Not what to spend it on necessarily, but how you're going to actually pay bills and make purchases. We have more options than ever before when it comes to financial services, different types of accounts, and financial institutions, and different ways of moving money around. They all come with their own pros and cons, and choosing the right one for you can seem overwhelming. In Banking 101, we will cover all of the bases of financial services. You will learn about writing a check and filling out a checkbook register.
So now we're going to talk about who's who in financial services. When it comes to taking care of your basic financial needs, the first step is finding a bank or a credit union. A bank is a for-profit company owned by investors in its stock. These stockholders elect a paid board of directors to manage the bank for them. Anyone can walk up to a bank and open an account. Credit unions, on the other hand, are financial institutions owned by their customers, who are also called members of that credit union. These members elect a volunteer board of directors, who are also members of that credit union, to manage the credit union for the overall membership. The credit unions also have membership qualifications that allow you to determine if you can join that credit union or not. By law, each credit union must serve a defined segment of the population. To join a credit union, you have to work for or have a family member who works for an employer in that segment. Despite their differences, both banks and credit unions can meet your needs. Both provide a variety of basic financial services, including savings and checking accounts, issuing credit and debit cards, and providing loans for cars, homes, and other purposes. Some things to consider when selecting a bank or a credit union include the following. Is it convenient for you? Will you be able to get there during the hours that it's open if need be? Does it have an ATM location in the neighborhoods that you frequent? Does it let you use other banks' ATMs free of charge several times a month? Does it offer other services you're interested in, such as online banking? Do you meet the age requirement for that institution when opening an account?
A savings account at a bank or a share account at a credit union is a place to deposit money you don't plan to spend right away. When it comes to setting aside money for your financial goals, you can get cash out of a savings account quickly and without penalty. This makes savings account a good place for short to medium-term financial goals. Some banks and credit unions make it easy to save by allowing you to set up an automatic savings plan, where money is transferred from your checking to your savings account every month. Fees for savings account are usually pretty minimal, but be sure to read the fine print before you open an account. Opening a savings account is a breeze. Take cash or a check made out to the financial institution of your choice for your first deposit. You will also need to bring picture identification, such as a driver's license, passport, or student ID. Check with the financial institution to find out what and how many forms of ID it requires. Make sure you also take your Social Security number. You will be asked to fill out a few forms with your address and phone number, date of birth, and maybe some current employment information. You will also have to sign what's called a signature card to verify that a signature is yours later, if necessary. Once you make your first deposit, you'll receive monthly statements showing your account balance. This is a total of your deposits, withdrawals, and interest earned. When you are ready to spend money in your savings account, you can fill out a withdrawal slip and get cash, fill out a transfer slip and move money to your checking account, or if you have mobile banking, you can transfer money between your accounts through your app. You can also withdraw through an automated teller machine or an ATM. Your biggest responsibility with a savings account is to keep your account number and information in a safe place. You also need to review your monthly statement and make sure all of the deposits and withdrawals listed on your statement are correct and that there are no unauthorized withdrawals or errors. Banks and credit unions are responsible for keeping your money safe and giving it to you with interest whenever you ask. Your bank also agrees to continue to carry government insurance to protect up to $100,000 of your deposits.
Let's talk about checking accounts. There are many reasons that you would want to open checking accounts, or they're also called shared draft accounts at credit unions. Maybe you don't feel safe walking around with a lot of cash in your pocket, and you want a safe place that offers easy access to all your money. Or maybe you just know that cash in your pocket is too easily spent, like myself. Whatever the reason, many people like to use a checking account to manage their day-to-day finances. Like a savings account, you simply take cash or a check that's made out to you to the bank and to open an account and make your first deposit with that money. You will also need your social security number and 2 or more forms of picture identification. Once you open the account, you'll receive a box of checks in the mail, pre-printed with your name and address, along with a check register to record your transactions. You will also begin getting monthly statements. A note of advice, some banks you have to request the box of checks now when you open an account, so just kind of have that on your radar when you go to open an account. Writing a check is like creating a mini contract between you and the person or business you're paying. When you sign at the bottom of the check, you are agreeing to pay the person named on the pay to this order of line the amount that you specified on demand. On demand means that your bank must honor your check by paying the specific amount to the payee when that individual cashes it, as long as you have enough money in your account to cover it. Get into the habit of recording each check you write into your checkbook register, along with your deposits and withdrawals, and always write checks in ink. When you receive a check, the process works in reverse. You take that check to your bank or credit union and sign or endorse it on the back. Your bank or credit union will cash that check or credit it to your account for that total amount, and the funds will be transferred from the payer's bank or credit union to yours. Sometimes if the check is for a large amount or from an out-of-state bank, your deposit may be held for a few days before you can have access to your entire lump of money that comes with that. There are many benefits to using a checking account. One is convenience. If you use checks, you don't always have to have cash before making a purchase. And you shouldn't send cash through the mail, just checks to pay bills. Also, you can usually access your checking account by using your debit card at an ATM. Safety is another benefit. You don't have to carry a big wad of cash in your pocket when you want to go shopping and purchase those gifts for family members. Easier budgeting. A checking account can also help you budget your money. When you use your check register to record whom you wrote the check to, you're automatically keeping track of where your money is going, making it easier to evaluate your spending habits. It also provides proof of payment. Checks provide that written proof that you made a payment to someone or a business. Each time you write a check that ultimately clears your account, there will be several records of it, making it easier to prove that you did in fact make a payment should anyone ever challenge you about it. The catch is that you usually pay for these benefits in the form of fees automatically deducted from your account. While you may see ads for free checking account and different accounts like that, you should know that no checking account is completely a free account. Of course, you are responsible for making sure your account information and checks are stored in a safe place. And while everyone makes the occasional mistake, it is your responsibility to keep track of your balance and make sure you have enough money in the account when you write a check. The consequences of misusing a checking account can be far greater than just paying fees. If the bank decides you have an excessive number of overdrafts, it may decide to close your account, and you could be reported to the credit bureaus. A history of checking account abuse can prevent you from obtaining another checking account and damage your credit history. And intentionally writing checks without having enough funds to cover them is considered check fraud, a serious crime. Filling out a check properly is just as important as ensuring that you have enough funds in your account to cover that check. Like we've said before, always write checks in ink. When we say write checks in ink, be careful of pens that are erasable. Usually they use friction to erase the ink. If you do that, the ink can go away from your check, leaving a blank check. So make sure you use some sort of permanent ink to write that check. Filled in data should align at the left of every blank. This will help you ensure that numbers cannot be altered and added. All lines should be filled completely so that data cannot be added. You should sign your formal legal signature because this is a contract or a promise to pay an intended expense.
Let's practice. Today you're going to write a check to XYZ Grocery for the amount of $52.34. So to fill our check out, we have check number 2008. It has our information on the top left corner. We're going to write today's date, February, so 2/23/2021. Pay to the order of, that will be to XYZ Grocery. And over here in this box, we will write $52. Make sure you put that decimal point there, and 34 cents. So you write 34 over 100 because it's 34 cents out of 100 pennies to make a dollar. So then we will come down to the next line and we will actually write out $52 and 34 cents. Now it's very important to make sure that you draw a line through the remainder of that line so that way someone can't go in and change that total at a later date. We're going to sign our signature on the bottom. That makes it that legally binding document. And in the memo line, we will write groceries. Now it's important that you write legibly with ink and that you fill the lines in order to keep someone from committing fraud. As we discussed earlier, keeping your check register up to date is important to know the balance of funds in your account. Let's record the following transactions in the checkbook register. On Monday, we opened our checking account with a cash deposit of $200. So as you fill your check register out, you'll put your code is D for deposit. You did that on Monday, so we will say that was 2/19. Description of transaction is you opened checking account. Being detailed here is very important. And you deposited, so you'll put that in the deposit column, 200, and your balance is going to be 200. Then you had an automatic withdrawal to pay for personalized checks. So that will be an automatic withdrawal, so ATM. Again, on Monday, 2/19. Withdrawal for checks. And it was a payment, so that was $20. So then you're going to subtract $20 from your balance of 200, and that will leave you with 180. Then on Wednesday, you wrote check number 100 at Fine Foods to buy groceries for $23.11. So in code, that is where you'll write your check number 100. That was on Wednesday, so that will be 2/21 at Fine Foods for $23.11. So then you subtract that $23.11 from 180, and that will give you $156.89. Okay. Next, you wrote check number 101 to buy books at Wayne's Book World for $13.50. So again, check number 101 to 21 Wayne's Book World for $13.50, and that gives you a balance of $143.39. It's very important as you go along that you keep total of that balance, so that way you know exactly how much money you have in your account. Then on Thursday, you wrote check number 102 for cash. That was on Thursday. So for cash, that's spending money for the weekend. So you just put cash in your description, and that was $30. and then you will subtract that, and you have $113.39. Then on Friday, you had an automatic withdrawal from monthly phone bill of $25.50. So that's again an ATM 223 withdrawal for phone bill. $25.50. That makes your total $87.89. Then on Saturday, you deposited your paycheck for $113.76. So we make a deposit on 2/24. Deposit paycheck. For $113.76. And that brings our balance back to $201.65. So your balance in your checking account on Saturday is $201.65.
We've covered a lot of topics in this unit, all related to the theme of financial services provided. You should know the ins and outs of using basic services to manage your money more efficiently. Click the link to complete the post test and see how much you learned this lesson.